Well, we've been waiting for about an hour and a half for Infosys's final Q4 numbers, and they have come out now. So let's go through the points one by one. In dollar terms, it has seen a growth of about, okay, I don't have the dollar figure on me right now. I'll just get that. 0.2% of a growth is what we were expecting. Let's get you the constant currency growth. Constant currency terms, we've seen revenues falling by about 0.8%. Now, we were expecting it to come in anywhere between 0.5% of a decline or an increase of about 0.5 to 1%. So that's as far as constant currency growth is concerned. Rupee revenue has come in at 23,267 crore rupees. We are expecting 23,450. So more or less in line with what we are expecting. Our profit is actually slightly better than what we are expecting, to 4,321 crore rupees as far as the PAT figure is concerned. But the important point is that Infosys has said that they will not be able to give a revenue and a margin guidance for FY21 at this stage, given the kind of volatility that they are seeing at this point in time because of COVID. They've in fact given a very detailed outlook of what the COVID impact has been. I'll get to that particular point in just a bit, but very quickly let's go through the FY20 figures as well. For FY20, revenues in dollar terms have grown by 8.3%, in constant currency term by 9.8%. Operating margin for FY20 is at 21.3%. They have, for this particular quarter, announced a large deal signing of over $1 billion. But of course, what they have said is that in the first two quarters, in the first half, on the first 2 months of the quarter, they'd actually seen positive strong deal signings, and post that there was an impact. Digital revenue has come in about $1,341 million, 41.9% of the total revenue. So all in all, it seems like it has more or less met expectations, but obviously the impact of COVID has come into the numbers. We have Anisha also joining in. Anisha, I'm just going through the numbers bit by bit, but some important figures there with respect to the internals. Even in terms of, if you look at the breakup between financial services, it seems like the growth had picked up, but it slowed down eventually. So if I break this up into the internals on a constant currency basis, financial services up by about 5.7%, retail 4.2%, communication 3.1%. This I'm talking on a year-on-year basis. Energy 7.3%, manufacturing 7.4%. So essentially, you're seeing the slowdown in financial services and retail that they were seeing earlier continuing. Anisha, what more do you have for us in terms of the internals?
Well, actually, Kritika, as you mentioned, in terms of the key numbers that we have in terms of the P&L, both in terms of operating profit as well as revenue, it has missed expectation. The deal win momentum has actually also slowed down, because this quarter we have seen deal wins to the tune of around 1.65 versus the average of 2.5 that we have been seeing in the last many quarters. You talked about the digital business as well. Remember, that one was showing a growth of over 40% in the last many quarters. That has slowed down. And to add to all of this, the management commentary again has a bit of uncertainty to it. Of course, they have not given the guidance for FY20, and that was largely expected. But if you go by the commentary coming in from Mr. Salil Parekh, he said that with the immediate short term, it is going to be challenging. And looking ahead, of course, they're talking about the strong balance sheet, etc. But they have a big, statement in terms of the COVID-19 impact, how it's impacting the employees as well as work from home. And that is something that the street also wanted to hear. Apart from that, as you mentioned, the BFSI segment has been slowing. But, Kritika, it's not actually very bad. Of course, it has slowed down to sub 6% now. But we know even before COVID-19, the BFSI was slowing. So the commentary going forward will be very important. So overall, in a nutshell, Q4 is weak. The management commentary is something that we need to watch out for. If, like TCS, they talk about recovery from Q3 onwards, that will be taken very positively by the street. Because remember, TCS also mentioned that there is no spending freeze by the clients, and that is what really ensues the market. So if something like that comes from Infosys, we'll see that the stocks will rally further. Back to you for now.
All right, Anisha, thanks for that. So let's just run our viewers through the numbers. It has been a miss on some counts, a kind of meet on some counts, but all in all, the fact of the matter is that COVID-19 has hit almost all IT companies. So dollar revenues for $3,197 million, a tad below our expectations. Rupee revenue 23,267 crore rupees, tad below our expectations. Margins bang in line with what we had expected, 21.3%, slightly below some analyst expectations. because we are expecting the positive impact of the currency to actually help margins to an extent. But the big knocker over here is that even though the constant currency growth was in line with what we were expecting, what lies ahead is very uncertain. So as a result of the uncertainty of COVID-19 pandemic, Infosys has decided to not give margin as well as revenue guidance going forward. While digital revenues have done well in this particular quarter, they have said that they are scaling digital revenues going ahead, but we don't know how exactly that will pan out. We don't have time for too much of analysis right now because the management is going to talk very shortly. But Amit Chandra is joining in. Amit, one question to you. How do you expect the stock to react tomorrow, and what would you make of the company's internals? A miss even considering the COVID impact that was already factored in, or is it marginally in line with expectations?
So, as we have seen that the Infosys has not given guidance, so this is pretty in line with what other companies globally are doing. So the uncertainty in the first half is really what every company is trying to assess. So based on that, I think the stock will have a negative reaction, because in the last 1 month we have seen some sharp recovery in the stock based on the portfolio resilience that Infosys had, and the quarterly numbers are a bit on the lower side versus our expectation. But it will be really interesting to see what the management the management commentary is, because the large deal TCV for Infosys is around 1.65 billion, which is largely in line with what we're expecting, and we expect the large deal TCV to moderate further in the first half. So the recovery trajectory for Infosys in the second half would be interesting to see.
All right, Amit, thanks for that. We'll have to take a break, but before we take that, a very quick note to our viewers. There was a point I read on the whistleblower matter where Infosys has said that we are unable to predict what lies ahead with respect to the whistleblower matter. Now, they had indicated earlier that the SEC investigation is complete. These Indian regulators are still investigating it. So we don't know how and what way that is headed yet. And that commentary is going to be important. Commentary on Q1, Q2 impact is going to be important. Margin pressure is going to be important, and exactly what the company is doing by way of subcontracting cost cut, by way of employee rationalization, that is going to be very critical, and that's what we'll watch for. 5:30 is when it was supposed to start. We'll have the Infosys management very shortly. Stay tuned for that. Quick break.
ये फर्श ही बनता है हमारा पहला प्लेग्राउंड। बीमारियां